Good morning, guys. Good morning, good morning, good morning. How's everybody doing? Somebody give me a sound check in chat for us. Guys, hear me okay? Hey, Dennis, Connie, good morning, good morning. Let's share my screen. Yeah, okay, that's good. Cheryl, good morning. Good morning, good morning, good morning. All right. Everybody's seeing my screen. Let's launch the CFDs. I'm actually really interested in trading FX today. Hey, everybody. Those of you guys who don't trade live with us every single day in the future CFD room, welcome to the NFP live. I'm going to trade it myself today because Kathy is busy on other affairs. We're going to just load up everything as it stands right now. I'm going to explain. Actually, I'm actually curious. So if you're in the room, if you hear my voice, just type in chat ask Boris if you're new and you've never traded with me before. You don't know what I do on a day-to-day basis, because I want to just kind of explain briefly the various setups that we try and do and how we're going to incorporate that into the non-farm payroll report that's coming up. So who's in the room here? Let me see if there's anybody new that maybe everybody's, let's see who's here. It looks like Paul. Paul, you're never with us, right? You probably have no clue what I'm doing. Brent is also never in the room here. All right. So, so let me, at the risk of repeating myself a little bit, let me kind of just review, and let's use Euro as an example here of what we do. So this is a 1 minute Euro chart, right? Because we know we're day trading, so we're using short-term charts for signals. And the absolute classic bread and butter. Let me just make sure everybody's seeing my screen here. Hang on a second. Yeah, okay, good. The classic bread and butter trade that we love to do is very, very simple in its structure. Basically, we take MACD, which is 12 and 26 EMA. So blue is a 12, black is a 26. This is just MACD deconstructed. We are looking to trade trend in a failed mode. Let me explain to you what that means. So MACD turns negative. Blue goes underneath black. There is a buy signal over here demarcated by this buy candle, right? Now, the low of this buy signal, and I'm kind of cheating because this setup is not quite 100% kosher, but it's close enough for what we like to do. This buy candle over here has its low broken by this candle. So this candle ends up way below the low. That's our perfect signal for a short. We love this setup. We ignore sell signals in a downtrend and buy signals in an uptrend, right? And that may sound really, really counterintuitive, but what we're looking for is, because sell signals in a downtrend and buy signals in an uptrend, of course, work in a highly momentum-driven market. Like right now, we have a nice little momentum slice, so clearly they would have worked. But they also tend to be sometimes selling the bottom, like over here, or buying the top. They tend to be sometimes exhaustion signals, right? Whereas fake out signals that literally take those that think that they're on the right side of the trend and then completely reverse them, tend to much more, not always, but much more, have much more continuity. And we're always looking for the highest probability beat on the price action. So something I did earlier today, which I did half-assedly, really half-assedly, but good enough, is you can see this type of structure setting up in the NASDAQ. So the NASDAQ starts to go negative slice. Here's a buy candle. This candle breaks the low of the buy, and I get short, right? I should have stayed longer all the way through, and it would have worked perfectly. But it was non-farm payrolls, and I was like, all right, it's been around. I'll take a little bit of profit here. But you can see in principle how the trade completely destroys those people who are looking for a reversal back up to the to the high, and then just slowly churns them down and takes out the lows. Whereas if you were looking for a sell signal, you're already way deep into kind of sold territory. Now, is there more continuity? Perhaps, certainly. It's not that this is an invalid signal. It's that this is a much higher probability signal. And this takes me to the next point that I kind of want to talk about today before we get to non-farms and do a little bit of preview is, and I'm going to write about this in this week's column. There are two things that I think are absolutely critical to making this setup work all the time, right? Number one, the target has to be at least 70% of risk. So if we're trading this with a 10-point risk, the target should be 7. And the reason why I've thought about this, and I've kind of really certainly did a lot of trading around it, and I realized, so if you have that kind of structure, if you have a 70% of risk structure, you break even at 58%, which means that if you win 2 out of 3 trades, which is what we try and do, we try to win 2 out of every 3 trades, you are naturally net positive. If you make the risk reward more difficult, your break evens get higher and your perfection rate has to be much higher. Now, we actually very often, as a matter of fact, this whole week, we've literally been 3 out of 4. Like, in other words, we win every three out of every 4 trades. But that, that's not the point. The point is that you kind of want to give yourself that whole margin of error. And if you can give yourself the margin of error and still be net profitable, that's where you really want to be. So to me, the sweet spot is 70% of target. It doesn't matter what your risk is. If you can't accommodate at least 70% of target, it becomes, over a long run, very difficult to overcome the break-even mark, right? And the number 2 trick, which I, clearly did not follow myself as well as I should have, is to literally, I did this yesterday really well, where I lay down a trade and I just walk away from the screen. Now the problem is that if you're working and you're busy, you can't walk away from the screen. So probably what you should do as a kind of a secondary gesture is just to close out the screen completely. That is an incredibly powerful psychological trick, because what that does is it commits you to your trade setup. It avoids this second guessing that you're constantly doing. It's amazing how, I don't know if I don't even know if I have like my last. I wonder if I have this. Let me see. Maybe it has in the mark. I wonder if it has in the history. Let me see if it has it. Just want to show you when let me see if I did this. Yeah, okay, history is here. So I want to show you one. Yeah, you can actually see both of them. This is where is it? God damn it. I'm trying to get it bigger. It's really hard to see here on these trades. This is why I just despise MT4 or MT5, because it just doesn't allow you to really, doesn't mark the trades. Okay, I think you can see it here a little bit. Sorry, you can see them over here I wonder if I make this bigger, does this become visible? Okay, I think you can see it here. It's really, yeah, you can barely see these lines. I don't understand why this can't be like super strong. But anyways, you can see it. So this is me taking a trade here for +7 and just closing the screen. This is me taking a trade here +7, just closing the screen. Is so much better when you do it that way. Just a really great psychological trick, because it stops you from having all those mind games. All right, we got 5 minutes. Let's review what's on the plate here today. Let me get the calendar. So, I'm going to start by saying I don't think this is going to be a big event. And okay, we're going to do it this way. I don't think it's going to have much of an impact today because the market is more or less accurate in its, 100,000 one way or the other way isn't going to move it. Only if this thing is negative will I actually think it'll be super positive for the market. And I'm going to look for any opportunity to get low. So I wrote about this today, and I said, why would a super negative non-farm payrolls be super positive for the market? And probably very negative for the dollar, so positive for the euro. And the answer is very simple. The only thing this market cares about is government intervention, right? The only thing this market is trading on is fiscal and monetary stimulus. So if we get a negative number, that could really light the fire under the ass of Congress and force McConnell, otherwise known as the turtle, to actually come to the table and pass a lame duck session fiscal stimulus bill, which in whatever form it takes will still be viewed as positive by the market. The market's going to start front running it. So only when you have, I think, if you have just a major market moving thing like this, will it be super positive. Ironically enough, if the number is stronger than expected, I actually expect it to have a knee-jerk reaction up and then sell off, because that may create less of an urgency, more complacency in the market, right? So we got 2 minutes left. I'm going to have the FX Street calendar, but I'm also going to put my Twitter feed up here because, hang on a second. Because within my Twitter feed, I follow all my buddies at Forex Live, and they tend to be super fast. So they almost post just as fast. It doesn't really matter. We're not going to jump on the release here. So here's Forex Live on their feed. We'll just watch that in a second. We've got about 45 seconds. And then obviously from an FX point of view, and I think it's going to be more of an FX interesting trade, right, initially than a currency trade, than a CFD trade. We're gonna. Sorry, let me just move the. I just want to make sure everything is to the edge. Euro doing a little bit of a sell-off pre, but if we get a negative number, I think it may pop. Looking at to see if the yen has anything of value. Yen has really been very, very quiet. Doesn't have much of a move. We do have. I'm going to talk about it. It'll take a while to develop, so I'm not going to discuss it now. We may also be looking for reversal patterns in any of these currencies if we get the move. So in the meantime, let's just where are we? Let's look. What do we got here? We got less than a minute. Let's just we'll see what FX Street does. Also look at the Canadian data, because if Canada is strong, so what is this? 4.4 hourly earnings, 4.4 for 7. Nah, it's a bad number, and it's actually kind of interesting. Let's see what the market reaction is. So yen coming down. Stock indices coming down. And this is where it gets interesting. I'm actually going to watch and see if we could get a reversal on these stock indices moves. Like I said, the number actually that it's bad may actually be good. It's I'm very tempted to just and you see the Dow is really starting to come back a little bit here. Ooh, yeah, I'm gonna buy the Dow here for 5 points forward. Let's see if we can get that going. It's a little bit late on this move here, but let's give that a shot. Boom. Okay, so that's done. Again, this is on the supposition that weak number knee-jerk reaction goes the other way. It was just a quick scalp. We don't have any signals, so it'll take a little while for us to see if we can develop some signals. But this was just a knee-jerk reaction. I mean, in a fundamental reaction to what I thought was going to be there, which is a positive, positive move to the other side as the market now looks for a stimulus deal. There's still, we'll see if there's going to be more and more sell-offs, counter reactions, but I'm really looking to see if I can get a technical signal to trade positive, to have the market trade positive to the other side. This is obviously negative dollar, by the way. So I do like any kind of a positive euro signal for us, right? But in order for us to get a positive euro signal, we need to have what we talked about, which is that sell signal gets reversed. We need the counterintuitive move here. It may take 5, 10, 15 minutes to see if we get any kind of sell signals in an uptrend that get broken to the upside, where we want to trade the euro to the upside. For now, it's going to take a while to set up, so I'm not gonna argue, or I'm not gonna force a trade. As you can see, the CFDs. God, I'm losing my mind here. I can't. The stocks are rallying. Dollar is weakening clearly. The pound is also kind of an interesting trade here, in a sense that it's really surprisingly strong here, right? Had a very, very strong move here to the upside. Here I would also be interested. You see how these are sell signals that fail to the upside. My favorite kind of a trade. So I'm going to be interested in looking at those. One thing I totally forgot, because in the midst of all of this, I didn't even pay attention. Let's take a look at how did Canada, where did Canadian data happen? So what did Canada do? Canada had a good number. Canada had a good number. It really puts us. Let's see if we should really put Canada on the board here. So Canada had a good number. Canada tends to usually have a knee-jerk reaction and then reverse itself. Let's see if we can do dollar Canada. So USD CAD. Oh, sorry, it's got to be capitalized. USD CAD dash. What the hell is this E? It's sorry, it's a very why is this not working? All right, you know what? Let's just add Canada to my list. It's gonna right now we're just churning around. There's no signals. There's nothing to do. So might as well just look around for some ideas. Let me just go to. I want to go. Where's file? New chart. I want to do color. Yeah. Market watch. USD CAD. I don't know why this isn't. Okay, must be the wrong symbol. Let's see. USD CAD. E. Yes, that's what I want. I want this symbol. So I'm going to delete this. All right, so this is obviously dollar CAD responding well to the negative news here, and could be an interesting continuity trade for us. Let's take a look at how it's all looking. I want to get rid of this one. Let's put a template on there. Default. I'm putting on my tool here just to onto the Canadian number. It's actually, I mean, it's looking very good as a continuity trade here, right? So the reason why I'm kind of hesitating, I'm not going to chase this to the downside, is because this is a very, very common mistake that a lot of rookie traders make. Canada will respond to the news. It will fall really, really hard, but then typically, if you're sort of selling over here, it tends to be kind of like catching the bottom. You tend to sell into the bottom. Your risk reward here becomes much less attractive than the initial reaction over here where the news is being disseminated. And what Canada loves to do, and we're going to look for this, is to revert back to the mean for at least 10, 15 points. The way we want to make sure that we get that signal, ideally, we like to have a buy candle, and this is our mean reversion setup, form. And that buy candle is so far away from the blue line, so stretched away, that it gives us all that ample room to trade back towards the blue line, right? But sometimes we don't get the buy candle, so now we have to just kind of synthetically see if there's going to be a buy signal, and that buy signal is constructed by what's happening kind of now, where first you create a segment low, like a big decline low, and then you have a buy candle that takes out the highs. So the buyers here kind of re-rally, stabilize the price movement and re-rally it. We'll keep an eye on this about 26, 27 minutes, whether it'd be worthwhile to try to pick bottom on this. But Canada is one of the few currencies where picking bottoms, selling tops is not a bad idea, but you really, really need to be very, very careful that there is actually a bottoming signal here. So far, the strength, there's still quite a, it's a very negative dollar piece of news, and there could be a lot more selling before before anything happens. I'm just looking at all the other currencies. So Euro doing nothing. Cable actually had a buy signal in this move. Yen, yen is still setting new lows. NAS is consolidating now after a big reversal move, and the Dow is consolidating. Everybody, the stock indices, I have a feeling, are going to be in a very tight little churn with little possibility to give us some clues. Although I'm watching how they're testing this buy candle. And now we can go back to Canada and see Canada has not really made a bottoming, but now it's getting close. Like this candle over here is starting to look pretty good. I love it when they have a long wick, and if like watching this candle, it needs to not quite there yet, but if I can get this candle over here closing green or closing blue in this case, would give me a modicum of confidence here that this thing has 6, 7 points to the upside. So we'll just see if we can trade this with maybe like because it's FX, I got to give it like around probably 12 if I want to give myself 10, and maybe 6, unfortunately. So I have to trade it with smaller stops targets. But if this candle really kind of I want it to close 63, 64. Sorry. 27, 28, ideally, like near the highs of the candle, because that would give me confidence that we're now finally starting to see a little bit of a turn. I may actually rush this trade. Let me just give this a shot. How many times would I get? 9, 8. It's not ticking. Okay, let's get long here. All right, let's just get long. Give ourselves that possibility of a small mean reversion trade. And again, as I said, this is really very emblematic of how Canada trades. This isn't a long-term fundamental view. It's just simply a market reaction. It's how you can try and take advantage of the market reaction that's going on right now. So let's see if they can just bring it up maybe 3 or 4 points higher. I'm actually going to put this down to 4 just because it's a tight little trade with spreads. Let's see if we can just pop it up. I always forget how slow the FX trades are. Okay, so I'm gonna actually take my own advice and ignore the chart, right? Let's ignore the chart. Let's look at everything else that's going on over here. NAS is consolidating. Dow also a little bit. Where's dollar yen? Dollar yen also crawling a little bit, crawling back up here. It's also showing the exact same sort of mean reversion move, for a couple of points. Probably would have been, this actually would have been a better trade on a mean reversion. Look at this, it's really starting to take off. Better than the Canada number. But now I'm annoyed. I should have been in dollar yen. But same kind of idea where you had bottoming. The candle completely, takes out the high of this, and then you have 4 or 5 points of mean reversion, taking you a little bit higher. You're showing a little bit of relative weakness. Cable too. Oh my God, this is like watching water dry. All right. So when it comes to stock indices, nothing really happens until about 9:30. And since today is non-farm payrolls, I'm not gonna. I got a meeting, so unfortunately I'm not gonna be able to hang out with you guys for the stock indices portion. And as I said, this is having just a very tepid little reaction. As a matter of fact, I'm really kind of like, Canada is just doing nothing here. God, man, it's right. I just have to be super patient here to give this a shot. It just feels like there won't be, there isn't going to be any kind of reaction until the U.S. equity markets open up. As I said, oh, you know what? Let's while we're doing this, let's look at what the analysis is saying, because I haven't even looked at the analysis here at how the numbers were. Where is this? All right, now from payrolls. I'm actually on the Canadian data. I'm curious if this was. Remember, with all the Commonwealth countries, they give you full-time versus part-time. This is actually so. This is actually a very bullish report. Full-time employment 99 versus 69 last month. Part-time employment was negative. So part-time decline, full-time increase, that's positive. These are all really, really positive numbers. You know, one of the interesting things we can do, let's take a look at the charts here, and let's look at the CAD crosses here. Let's just, you know, see if we can do CAD. Like, is there anything interesting on longer term charts? CAD Swiss really looking good, right? Like that is a good trade. How's it looking in the 1 minute chart? Oh, our dollar CAD hit good. See, I stopped looking. Here's a perfect example of what I'm talking about. Don't look at the charts and you'll get your take profit. Dollar CAD totally hit its take profit. Again, completely counterintuitive. It's positive data, blah, 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 blah. But remember, the dealers always control the mark. Oh yeah, Demetrius, thanks. I haven't even looked at at DAX today, kind of quietly. But yeah, I'm glad you got the CAD. Anybody else trade the CAD with me? Anybody else got to the long side? Rob, see Rob, we now trade FX in the chat room, and we're actually going to get a lot more serious about trading FX because the strategy is so good for FX trading. You know, both sides. Like last 3 or 4 days, we've actually a third of our profits came from the euro and the Fed. Good job. Pound Kiwi. What the fuck was that, Dennis? Like, how is that even relevant? But good for you. No, I'm just kidding you. Anyways, you know, Caddy now is doing its, you know, usual retrace thing. But you know, if I was looking just kind of tactically for a where's my chart? Ah, damn it. Sorry guys, I have a million charts here. I think it's this one, right? So no, where's my oh, here it is, CAD Swiss. Okay, so this is CAD Swiss 1 minute chart, right? I'm looking, you know, I'm looking at this as within the kind of structure we like to take. We have a buy signal here in an upward trend. It's clearly an upward trend. I think like tactically, this is not a bad trade. Like not a trade that I would just do generally, but like I think this is not a bad trade here. This 69.40 with like this is for the day, with a stop underneath the low 69.15. So it's like let's say it's a 30-point stop, and if I go at 70% of target, which would be 20, right? About 20. So if I'm looking, so 69, basically the swing trade, and you guys feel free to let me know how that goes, is around 40, target is 60 with a stop at around 10 on CAD Swiss. This is combining, you know, the funda of the much better than expected Canadian data with the general technical structure of what we have, which is an upward trend, buy signal over here. We usually don't like to chase them, but this kind of retrace, I should have actually bought at 36 on the retrace, but it's good enough. You know, and it's, you know, it may be worth trading, maybe even worth trading on a tighter basis with like a you know, 10 target, let's say 69.50 as our first target, and then go to break even, or you know, 69.50 with like a 25 stop underneath here, because I think, you know, if it comes back down to below 25s, I wouldn't be that much interested in it. But this is probably technically and fundamentally the most interesting cross trade post event because it's clearly positive Canada. The Swissy is relatively weak today. You know, if we get positive risk flows, which is what you're going to get in the equity market. Let's see how the equity markets are. They look like they're really, you know, they're bid, right? Equity markets are bid, more or less. You have a decent chance here for this continuity trade. Oh, what got me into the dollar cat trade? Sure. Let's go back to the chart. Okay, let's watch this. And I got myself in early because we actually had a signal over here on the buy side. So there are two types of trades that we trade. Like right now, by the way, dollar cat is looking a little weak. You know, Canadian dollar is looking a little weak because the trend is changing towards positive dollar moves. But as I said, what we like to trade is two types of trades: the continuity trade where the sell arrow is broken to the upside and uptrend, or the mean reversion trade where the buy arrow goes towards the moving averages, right? So in this particular case, what we're looking for is a massively stretched trade away from the moving average. This is the short-term moving average of 12. So the price is totally stretched out, right? Then we're looking for a sign of bottoming. And there are two types of sign of bottoming. The classic sign of bottoming for us is when we get a buy candle that pops up and the price is stretched. In this case, the buy candle is a little bit late. It's already piercing the blue. We don't like to be that close to the blue because what we want to do is we want to be traveling from this level all the way to the black. And the farther away we are from these levels, the greater the probability that we can come back to the moving average, the mean reversion, right? It's the rubber band effect. We're trading the rubber band effect. The more we're stretched, the better position we are to come back, right? The closer we are to the trade, the more we have a retrace risk and the less forward momentum we have. Do you understand what I'm saying, Larry? So when we entered right over here. And the reason why we entered over here is because if we don't have the buy arrow, the second best idea is a blue candle that engulfs the red candle. So in this case, we actually had a couple of really positive technical signals. We had the sellers take the lows and then bring it back up. They left a wick. That already suggests to you that there was a lot of buying underneath here, right? And then we got confirmed by the fact that the next candle completely engulfed this body, right? It ended up above the body, not quite above the high, but above the body, right? If you wanted to give yourself one more confirmation, you would have waited for this candle, which broke above the high. Those two things gave you lots of confidence that this was a bottoming formation, and there was possibility to go back up, right? At least to the moving average. But we weren't looking for a lot. We're looking for 4 or 5 points. It actually went all the way up to like 10, 12 points on the long side, right? I'm always kind of exiting early on these trades. The whole point is if the trade has a possibility of 20 points and I only want to take out 7, my probability of taking 7 is very high. I want the highest probability trade possible. You know what I'm saying? Like I want the absolute filet mignon of the cow, even though there's a lot of meat on the plate still, right? I'm just going to take the juiciest morsel because that's all I want to be. That's all I want to be feasting on. Does that make sense, Larry? See what I'm saying? So we went long when we got that signature trade of the blue engulfing the red. Got long here, took about 4 or 5 minutes, and then boom, it resolved to the upside. And now, of course, dollar. And by the way, this type of pattern, and I hope everybody's going to join me in the master class. This type of pattern is literally completely fractal and completely universal to anything you trade. That's why I actually really like trading the FX with it now, because it's just as effective in FX as it is in CFDs. And now that we start turning our attention to trading currencies in the chat room, we're actually having success with that as well. And I know, almost everybody in the room is much more currency focused than they are stock index focused. So this really introduces you to our trading techniques with a medium which you're much more comfortable with. So I'm really hoping that. Good job, Rob. So this is what I want. Almost everybody who trades with me makes more money than me, which is exactly what I want to hear. I really want to hear that. Actually, hey, Karen, is anybody in the room? Where are my girls? Connie's here. Karen's here. Cheryl's here. Cheryl, did you trade today at all? Because almost everybody in the room has the better construct, has the better patience, or they're just and I am and I'm rambling on, so I'm just trying to kind of manage my positions. But that's the idea. I want to show you the filet mignon. You take the full cow on the trade. And actually, just curious to see how's the CAD. Where's this CAD Swiss? Oh, it's just basically doing nothing. It's flat up here, but continues to inch higher. I still think this is probably on a swing basis, thematically, not a bad trade. Although the one thing that worries me, and it's not a function of anything that you can predict. It's just how much crap the dollar CAD dealers are gonna put you through. Canadian dealers love to go the opposite way of the news and flush out the fundamental traders before they actually resume the proper trade, the proper trend of the currency. So the only thing that's keeping dollar CAD from rising right now is there's probably a lot of real money demand. The only times the dealers can't play that game in dollar CAD is when there's so much real money demand that they have to kind of let the currency go. But there's nothing more they like right now than going the other way, which is why, even though the news was positive, I was actually looking for any hint of how we can trade on the dealer side, right? Because dealers love to F with you. I mean, it's the most, this and the Australian dollar are the single most counterintuitive currencies that you can imagine. And what's great about our setup and what's great about our structure is that you don't take any of this stuff personally. Once you understand how the game is played, you can apply your techniques to the game without saying, well, but how come it's not, how come it's rising? It's bullshit. It's the best number, that it beat the number by 5 times expectation. What kind of nonsense is this? The game is rigged. No, you don't want to sound like Trump. You just want to use your techniques to properly position yourself. So that's another reason why I really love the technique. It's completely neutral in its emotional assessment, right? It just takes a cold, hard look at what the price action is doing, and as long as you understand, where the game is at, you can play with the strong players at the table instead of trying to force the market into your point of view. I always have a point of view, and it almost always is immaterial to what I'm doing. Because the better way is to trade the market. So this is a good. Finally, maybe the CAD Swiss is actually working because dollar CAD is starting to straighten up a little bit, right? Yeah, it's popping 2 points. Okay, whatever. It's a 1 minute chart. It's going to move around. But anyways, this is thematically the one trade I have. Dollar CAD worked. The Dow worked. Let's just see if there's anything on the. I've been so quiet on the CFDs. Let's see if there's any movement on the stocks. I still say, and this is really my opinion, and I'm only going to practice my opinion if I get the price action to confirm it. I still think that the trade in equities is to the upside, because this is going to, as I said, light the fire underneath the turtle's ass to maybe do a stimulus package, and that's a much more important aspect of the trade. Nasdaq seems to be it's interesting. Nas is relative weakness. It looks like the Dow may be a relative strength today on the trades. So be watching for those. But until we get a semblance of confirmation of my point of view, I'm not really trading this. The way we would get a confirmation of my point of view in a Dow is since we don't really have any good reversal signals here, what we would need to do is get a good continuity signal. The trend has to go positive. You have to get a sell signal. That sell signal has to get broken to the upside. And once we have a sequence of all those events, only then can we commit to a trade structure, and make it happen. But until we have that, we don't. Anyways, I want to leave you guys literally with these two tricks. I am absolutely convinced this is the best advice I can give you. You can take it or leave it. I'd love to hear your feedback on this. And this, by the way, again, only to those people who want to day trade. This is all short-term trading advice. This is if you're long-term trading where you're trading with multiple exits on longer-term charts, none of this really applies to you. But if you're day trading, keeping profit at 70% of risk is the sweet spot you want to be. That gives you two out of three winners, puts you in the positive camp every single day. Is that clear to everybody? Does everybody kind of understand that point? That's point number one. And then point number two is walk the F away. Put the trade, go make a cup of coffee, go tinkle, go walk a dog. Walk the F away. You are not strong enough to resist your own impulse to screw around with a trade. And I have like a third thing, but I'll save that for the column, which I think you're gonna find. Sorry, Boris, you're not what? Oh, strong enough. Yeah, no, but nobody is. This is the crack cocaine of trading. This is literally the crack cocaine of trading. Okay, the whole point is that it's designed. Now, the thing you need to understand though is, like everything in life, there are very vastly positive aspects of it, as long as you understand what they are. The super positive aspect of the 1 minute chart is it gets you in early. It gets you in early. So yeah, I'm so glad you like it, Larry, because you and mine and your personality are very similar to that aspect, and I think you're gonna like a lot of these tricks, tricks of the trade. So the point is that the 1 minute chart is get you in early, right? That's the positive aspect of it, and that's why we hit our trades. This is like, seriously, I think we only had 2 losers this whole week. We've had 2 or 3 trades every day, so that's, you're talking about 15 trades, and we're like at 80%, and I need to be at 66%, kind of on a longer term basis. That's really my goal, is to be 66% accurate. So that's the whole point. Is we want we want the early accuracy of the 1 minute chart, but then we just don't want to be swayed by the crack cocaine of the price action. Paul, to answer your question, the bread and butter trade, where we sweep, the fake out trade, where we buy failure or sell failure, which I showed you, which is completely fractal, meaning that you can do this on 1 month charts, not just 1 minute charts, right? Like the setup actually works amazingly on day charts as well. I'll show it to you. That EA, like that logic, is going to be in the EA coming up in the masterminds class. So that will be in the masterminds class, right? So so that will have some value. But you're gonna learn this. It's a very, very different approach in terms of risk rewards and other stuff like that. I am still, like, just to kind of finish my thoughts, I am not a lover of EAs. I like tools and I like scanners. And really the next big project, which we're going to work on, is the ability to create a scanner that will literally tell us signals on the dailies, signals on the hourly, signals on the 4 hours, so that we can then manually assess and trade, trade a broad array of interesting signals. Because I think that's so, like, we're going to create a dashboard. Yeah, exactly. So Crossy right away gets what I'm talking about. So that is the next really big project. Because we've got the setup, we have the great trading tool. This is the final piece of the puzzle. This is my big 2021 project. I mean 421. We're gonna have this done probably by the first of the year, and that's gonna make the experience so much richer. Because I know, God knows, I mean, I love to day trade. Everybody who's in the room with day trades, but that's like a small fraction of everybody else in the room, because most people just want a much less crack cocaine experience than what I provide. And this will give us a much more leisurely approach to finding really interesting trades, really interesting trades. So I hope to see you guys all in Masterminds tomorrow night. It'll be recorded if you can't make it, no problem. And then, we're going to rock and roll again starting next week. All the setups, all the structures are certainly taking its shape. Just wanted to see what what was setting up over here on the NAS. Yen retraced a lot of this move here. Wow, yen was the trade to the upside. I mean, that's an interesting move. Euro did nothing as I suspected. Cable kind of choppy. We got really no signals in the cable. And dollar CAD straightened up a little bit, so that's good. So dollar CAD, let's see where the CAD Swissy is. Where's my CAD Swissy? Basically doing nothing, dicking around. The CAD Swissy did go up to 44s, 45s. So still putzing around. We'll see if that trade moves around. Is there a recording of this webinar? Yes, there will be a recording of this webinar. I'll post it in a little bit. But anyways, hopefully you guys enjoyed it. I know this is a very different kind of non-farm payrolls trading from the ones you usually have, but that's the thing. I really wanted to introduce our stock trading techniques to those of you guys who traded at FX to just give you a flavor of the possibilities you could have trading the stuff that we've been doing for the last 6 months here in the chat room. So thank you so much, guys. Hope you guys really enjoyed it. Any questions, always ping me up. I'll put this up on the video in about an hour, and I'll see everybody Saturday. Thank you, guys. Have a great day. Take care.